All right, welcome back to the Global Business Report here on Rise News. All right, so we're going to be discussing the stock market, of course, with our guest in just a moment. But again, let's go through those figures. Let's put those figures back on the screen, taking a look at where the exchange closed yesterday. So once again, it's been a good week for the exchange. Can it be maintained? So all-share index, 47,510 points, 0.4% closed yesterday, but for the week, almost 2%, 6,212 deals, 385.1 million volume, valued at 4 billion naira, equity cap 25.6 trillion. So let's talk about it. Let's bring in our guest, Muktar Mohammed. He is, of course, a financial analyst, investment banker, CEO of Finance with Muktar. You're welcome, Muktar. Should I be saying Happy New Year? This is the first time having you this year, yeah?
Yes, definitely. First time you're having me this year.
Good to see you again, sir.
Thank you.
You're very welcome.
Always a pleasure.
Yeah, so what do you make of the triggers for why we had such a healthy week on the markets, I mean, Monday through Thursday?
I think basically those triggers were prompted by the payment of dividends, especially from the liquid shares like, Zenith Bank, Gisco, and others paid, UBA also paid their dividends. So investors had liquidity to begin to switch into some of those liquid stocks again, knowing that we are going to enter, we're going to see the first quarter result comes out, and then we are projecting the second quarter result that will come also with some little liquidity again in terms of dividend payout for investors. And those prices were relatively cheap when you look at the PE ratio and you look at those companies and what they bring to the table, especially when you look at their result that they does analyze before the year-end result. Though we've not seen the first quarter, which always is a little bit it's a determining factor towards what you expect. But you know that with GTCO, you know that with Zenith, you know that with UBA, you know that with Access, you get 25 kobo, you get 30 kobo. So investors are already looking towards that. And you saw the price of GTB was marked at 22 naira, but at the close of market, it was 24 naira. So,
interesting. As far as, okay, so no trading today, no trading Monday, but you think this can be sustained through next week?
No, the challenge we have is that we have local investors playing the market, and some of those local investors that have huge funds are those that used to play the treasury bill space, the fixed income space. So they are not ready to stay there for a long time. So some of them are short-term players. So definitely you see the market, because when they make some of those profits, they try to calculate it based on their 30 days or 30 days, 90 days, 181 days, and they tend to cash out. So you will not see those runs, those bullish runs that you see sustained for 1 month, 2 months, sometimes 3 months.
Gotcha.
Because those that do that are the foreign investors, because they come in with a lot of funds. They come in at a cheap at a market valuation that is cheap, and they have up to most of them have up to a year to hold those funds, and then those funds are cheap also.
Yeah.
So what we've not been seeing those foreign investors. It has been a local market thus far, but you could say it's positive because it seems that the locals are taking ownership of the market.
Yeah.
But in terms of sustainability of the bullish run, it's a big challenge.
Okay, well, I'm glad you mentioned this, because my next question was, since it's been domestic investors that have been supporting the market, aside from bullish runs and so on, is it good? I mean, because we've had less foreign investors play in the market. How do you see that dynamic?
Well, in the long run, it should be good. But sometime again, the world is a global village now. So you don't want your market to be dominated by just locals alone. You want to attract foreign investors. Because again, we must not be myopic about when we talk about foreign investors. When you look at foreign investors coming into the market, you're looking at foreign investors coming into the market. And in turn, those foreign investors will become the foreign direct investors. And foreign direct investors are the ones that are going to stay there for a long while. So sometimes you look at foreign investors, first of all, portfolio investors, looking at the climate, and then when they come in, they begin to think of staying for the longer time. And the whole idea is that they will not create those companies and then provide job for your citizens. So that's the long. So you don't want your market to be driven only by local investors, even if you want local investors to play the market. And again, our own is a bigger challenge because the foreign investors help us to stabilize our currency, especially the exchange rate between the naira and the dollar. So once you are not seeing them, you get those challenges.
Gotcha. Well, thank you for that explanation. So let's get into some of the indexes. The banking sector, I know the banking was down by 0.65% yesterday, but Monday through Wednesday did pretty well. And you've already mentioned a number of banks, so I know you like financials.
No, you see, the financials are always the most liquid. Yeah, I mean, they are liquid and they pay good dividend. Now you look at their PA ratio, and then you look at inflation figures. Then you tend to say, look, they've done well. Yes, the numbers came down, like you said, towards the end, and that was attributed to the drop in price of Zenith Bank. But like I said, when you look at that drop in price just in a single day that brought it down. But when you look at Zenith Bank was at 22 naira and moved to 25 naira 60 kobo before that drop, where we saw it at 25 naira. The same thing with UBA. We saw UBA move from 7 naira 75 kobo to 8 naira 20 kobo also. So you saw this movement. Even Access Bank moved from 9 naira 95 kobo to 10 naira 30 kobo, 10 naira 25, 10 naira 40. So, but once there was those drop in those prices, you saw those numbers. But I think for the banking sector, it's just a short time. They will definitely bounce back again.
All right. What about industrials? 1.23% for the index. How do you, I guess the cement players and so on.
The cement players are just the players there.
Yeah.
And when you look at Dangote Cement, and then you look at Lafarge WAPCO also is there. So those are, remember, we are building infrastructures, and those are the mover of those sectors. When we're talking about infrastructure, a lot of projects are coming up. Housing project, road project. Now the roads are now being done with solid cement.
Yep.
So definitely you see those numbers going up. Those sectors are going to be there for a very long time because of the infrastructural gap that they need to fill.
Well, and so people, there's the talk of the price rise in cement, right? But that's good for the companies and good for investors, right? Even though the average person who has to, developers, just to follow up on industrials.
You need to look at, when you talk about costs, when you look at the price of cement, we need to look at this. We're having a challenge.
Yeah.
The challenge that we're having as a country, we have three major types of inflation. We have cost-induced inflation.
Yep.
We have market-induced inflation.
Yep.
Then we have production-induced inflation. Now, cost-induced inflation, production-induced inflation, market-induced inflation, macroeconomic-induced inflation are all playing out at the same time.
Wow, yeah.
So that's why you see the cost of those cement goes up. Not because the cement companies want to just... You remember, the cost of diesel has gone up. Most of these people are powering their own private power plant.
Correct.
So that is in terms of the cost of production. So then you look at the macroeconomy. Also, you look at the high rate when it comes to FX and everything. So it's a major challenge. So it's not just because they want to hike the price in cement, but because of the cost that is induced through production.
And in fact, if we go back to banking, that's economic environment argument that you've made. That's probably why you're seeing interest rates where they've been for
yeah, so you see interest rate that now. You see what the bank are doing now. Maybe you've gotten those messages from them. They are now saying because of diesel,
they
close by 4
they are closing down.
So they are trying to reduce intense costs also because they know that it will be a big challenge for them.
Now, in fact, in line with this conversation, bringing consumer goods have their own headwinds. I guess inflationary, disposable income. I think consumer goods was down by 0.11% yesterday. That's the index.
I'm even sure it's just down by 0.1%. I say when the numbers start coming up, because most of them may come up with profit, but it's going to be tough for them because they are the ones that are really going to suffer. Yeah. Remember, inflation figures are going up, consumer confidence is down in terms of earnings. So I don't personally advise anybody to play that space now.
Consumer goods,
Yeah, consumer goods. It's going to be... I want to see the first quarter result from those sectors, but I don't think those sectors are sectors that any shrewd investors who want to play with key glove. They will just look at the price in terms of price movement. But when the results start coming out, I don't think the result will be done fantastic.
I thank you for making this excellent point, because the flip side argument for consumer goods has always been that we have a large population. So large population, you've got volume.
Now large population now, it's if I used to buy 2, I'll buy 1.
Right.
We got to manage it.
Right.
Because the costs have really gone up. And then the production costs also have gone up. And then you remember again, they also are grappling with the fact of FX. Also getting FX to bring in some of their machinery to get working. So their capacity to even produce more is hindered.
There's so many, everything is so interlocked, you were talking about the industrials and how they have their own power plants and they are, powering their own, sectors and everything that they do, production plants and so on. And then you've got consumer goods with the fact that they've got to import machinery. If I was just talking about the central bank disbursing 35 billion naira to exporters, if we can fix our in-house production for these machinery and so on, does that not provide a boost for industrial consumer goods?
It will, but unfortunately,
it's a long time to get there.
It's a long time to get there, and we're not looking at that.
Wow. Oil and gas. What about how are you seeing oil and gas?
Fortunately, it's supposed to be one of those stocks that should be booming now.
Yeah.
I mean, unfortunately, it's not that.
Yeah.
Because when you look at that sector, you only look at Seplat.
I was about to say.
The only mover there. Then when you look at the Wando is being going with a lot of controversies, and those controversies have not left them. So we are not seeing those numbers from those sectors. So Wando's have not given. They are owing us almost 2 years results. So you look at Seplat, and they have done very well. Remember that stock at the end of last year was
fire.
Was 500, and it's going over 900 and something. So they have really moved up. And remember, that stock is holistically listed. They have both the marketing. They are all listed there. And remember that they got this buying of this asset of ExxonMobil. If you say there's 1 or 2 challenges there that have not been resolved, but definitely those challenges will be resolved. They are one of the big players in the oil sector.
Overall, so in summary, as far as the market for the rest of this year, if you can give us a quick answer as for the rest of the year, how do you see the market playing out?
It will be up and down.
Up and down, eh?
It will be up and down.
That's
but
what
then,
makes it exciting.
Should investors, it's based on what time and opportunity you see in the market. Those that are able to see opportunity in the market and get in there at the right time would definitely make it huge. The All-Share Index will definitely close high. But again, sometimes individual portfolio does not correspond with the All-Share Index.
Right.
So you need to look at some of those good stocks to pay, especially when you look at the price and the earning per share. And never to forget that liquidity is power in any economy. So Nigerian investors love dividends.
Muktar Mohammed, CEO of Finance with Muktar, also financial analyst and investment banker. Thank you so much for joining us.
Always a pleasure.